All right, welcome back, traders. In this video, I'm going to be going over another great trading indicator tool that I used to use. It made me a good amount of money. So in this trading video, I'm going over the Traders Dynamic Index indicator. So they're also known as the TDI indicator. So when you are setting up the TDI, I actually go into the settings and I tweak the settings to my liking. So the upper band, I'll still keep it blue, and the lower band, I'll keep it blue. I just thicken the lines in the settings. Instead of orange for the middle of the band, I actually go with yellow. I make it very visible for me to see. It just makes things a lot easier for me if you can actually see the lines. And when it comes down to how I'm actually trading this, it'll make a lot more sense. So you have your slow moving EMA, and then you have your fast moving EMA, which is in red. So I was using these as signal indicators to get into the market. So I'm going to take off the plot backgrounds, and that's actually going to help you see the market a little bit better. So for this one, I'm going to turn it white since the chart is actually black. You can turn it whatever color that you want. Actually, that's not going to be easy if you. I'm going to continue to stick with blue. The blue is kind of really what I'm used to. So we're going to keep that at blue. And it makes it a little bit easier for you guys to see. And maybe I will change this background just for you guys. And that is actually it. I'm actually comfortable with that. So in this example, what I do is I see the yellow line as the baseline of the market. So that is where the market is at its baseline. So in the market tends to come up to the 68 on the tool. And you can grab a horizontal tool and bring it down to that indicator. So what I like to do is I like to adjust the settings while in the horizontal line. So I'll come back up here, go to the settings. You want to make these settings to 68 for the top, and you want to make the other setting for, okay, let me see, there's another line super close. Probably should have adjusted it before that. There we go. And you would make the other line 63. So anytime that the market is in between the 63 and 68, you know the market is truly overbought. That is a good indication to know that the market is overbought. So we're going to take another horizontal line at the bottom. We're going to take actually two of them, place them both at the bottom. Now for the bottom, you want to make sure that you have the horizontal line at the 37. And have another horizontal line for the second one. Let's see if I can get it. Yes, the second one you want to have at the 32. So this gives you a good, nice flow of the market and actually knowing where you need to be in the market. So anytime that the market comes back to the 50, and that is a good indication that the market is consolidating. You only want to be in trades that are overbought. When the market is extremely stressed out and it is overbought. So in this indication, the yellow baseline is in between the 63 and the 68. So all throughout this area I would be looking for sells. So this is a good tool to actually use if you know how to use it. And this is why I'm helping you guys. So It's a great tool to know that the market is actually truly overbought. The yellow baseline will actually be in between the 63 and 68. There are occasions where it does come out of those lines, and that's when the market is extremely overbought or oversold. But consistently, it stays between those. Now, I would only recommend use this on the 4-hour time frame and above. So 4-hour, daily, and weekly. These are the only time frames I actually recommend you even use it on. So at that point in time, the market was overbought, and at this point in time, the market has become overbought again. And it stays consistently where I would start looking for a sell somewhere around here. And that'll be a great sell, put you close to the top of the market to where you can make some money off this thing. Now let's go back and see if we can see a good buying opportunity from this tool. Now these setups do take quite long, but they do pay out very well. So in this situation right here, you have a good buying opportunity. This opportunity for buying is right here. This places you right at the bottom of a good buy, so you know that the market is exhausted and it is oversold and needs to actually do a pullback. And this places you in a good amount of pips, probably about a good 100 pips to 50 pips on average from the H4, and from the H4 and above usually gives you about 50 pips to 100 pips, and that's a great move. So you look throughout the market, and this is what I want you guys to see. If the market is just coming close to it and comes right out, I don't trust it. I want it to be well into the 63 and 68 zone. If it's not well into it, like so, right here, let's see, 32, let me fix that again. If it's not well into that zone, I really don't want to trade it. When I used to trade this tool, I never wanted to trade that because that's not something I can agree with. So this would be a good point to actually get ready to buy. And you see where it places you in the market, it gives you a great opportunity to buy and actually stay with the market and keep it going. Usually the baseline comes back to the 50. I usually take profit as soon as it comes out of the blue Bollinger Band. At that point in time, I know that there's no point in being in the market. Take your profits and continue making money off of this tool. So with that being said, I hope you guys enjoyed this video of the Traders Dynamic Index. Like, share, and subscribe to this YouTube channel. Helps the YouTube algorithm and helps me build this channel and get to helping more people. All right, peace.